Greetings to all. This is Neel Harshad Parikh, a technical research associate at GEPL Capitals. Welcome to this weekly market outlook video. In this video, we are going to talk about the Nifty and Bank Nifty current market chart structure and the levels to watch out for the upcoming series. And we'll also discuss the two stocks which is a high potential to outperform in the upcoming series. Without any further ado, let's start with the video. So this is the Nifty 50 weekly time frame scales. In this chart, we are observing that Nifty has been getting a prolonged downward trajectory and witnessed a six consecutive day of weekly lower lows and lower highs formation. And index has been sustaining below its 100-week exponential moving average. That defines the near-term structure has been deteriorated and it should be pertained as a cautious sentiment. On the daily scale, if you look at Nifty has been forming a falling channel, forming a lower tops and lower bottom formation. And during this phase, every rise is getting sold off from its upward trend line of the resistance. And as well as Nifty has been sustaining below its key moving average level as well. So near-term trend remains weak and sell on rise strategy should be adopted on Nifty for the near-term basis. If you look at on the daily scale, after witnessing a three consecutive day of rally, Nifty has faced resistance at its sloping channel resistance zone. And today's trading session, which is a Friday trading session, index has slipped from this level and witnessed an exhaustion. So near to this level, which is at 23,400, 23,500, it would be a resistance zone, while at a lower scale, 22,500 to 22,000 level would be a base level for the Nifty index. Actionable setup on Nifty would be sell Nifty below at below 22,700 for the target price of 22,200 and 22,000 level. And in this case, we have to maintain the stop loss at the level of 23,150 mark. Looking at the Bank Nifty index has been getting uh, more selling intensity. As if we look at Bank Nifty has witnessed the breakdown of its upward sloping channel pattern, which has been adjoined from 2023 swing bottom. So during this phase, if you look at the Bank Nifty since 2023 bottom, Bank Nifty has been moving on a structural gradual upward trend. But on the recent weeks, Bank Nifty has broken out this particular trend of upward trajectory, maintaining lower lows formation for the fourth consecutive weeks now and trading below its 100-week exponential moving average level as well. That defines near-term structure for Bank Nifty also remains on a weaker territory, and sell on price strategy should be adopted on Bank Nifty level as well. If you look at the daily scale of Bank Nifty, the Bank Nifty is also getting a resistance at its higher level of 54,000 level and to 55,000 level is the resistance zone. And at a lower scale, 51,000 to 50,500 would be a support zone for the Bank Nifty index. Now, during this phase of current market volatility and the weaker scenarios, if we are witnessing, there are two stocks which are standing out from these particular scenarios. The first stock is Aether Limited. So Aether Industry Limited, if we look at on the daily scale, the stock has witnessed a breakout of its base pattern adjoined from 2024. And during this formation, if you look at starting from November 2025, it's maintaining its high top, high bottom formation. And on the recent case of on March 2026, index has witnessed the breakout of its base pattern and it's been sustaining above its key short-term moving average level as well. As well as key things to note on this level is that if we plot the RSC indicator, which is the relative strength comparison. So if we compare this particular stock with the benchmark index Nifty 50, the RS line is trading upward trajectory and above its key average line of 20 RSC level that defines the stock has been relatively strengthening going forward. And at a current market price of 1,170, we can enter at these levels with a target price of 1340 level at a higher scale. And in this case, we have to maintain the SL at 1090 to maintain the effective risk management. Second stocks that we have shortlisted is GVT&D. So GVT&D, if we look at on the daily scale, since the level of April 2025, the stock has been getting a gradual upward trend. And during this current market volatility as well, the stock has been remained range bound and it has been not even breached its 50-day exponential moving average during this market volatility, as well as the RSC, which is a relative strength comparison. If we compare this stock with the Nifty benchmark index, it's been forming a high top high bottom formation and trading above its average line of 20 RSC level that defines the relatively to benchmark index. This stock is also outperforming. So going forward, the stock has been targeted toward a level of 4,230. And in this case, we have to maintain the SL of 3,390 level, which is the swing bottom of March 2026 level. So these are the two stocks that we have to watch list for the upcoming April series to get an outperformance in our portfolio. So hope you like the video. Do share and subscribe to GEPL Capital's YouTube channel. Thank you.